Hello, hello. Welcome in, welcome in. Hope you guys are doing well. Make sure the audio is good on my end. Welcome in. Alrighty, we are good to go, guys. Hope you're all doing well. Hope you're having a fantastic weekend, and hope you guys are staying safe. Let's go and get into the business here today. Let me get the case off this thing. All right, guys. So as you know, we had the month of January pass us, and now we're going into the new month of February. Let me get this into the top corner here. All right, there you go. I think I look better on the top right. All right, so as I was saying, guys, we have closed the chapter on January, and now we're going into February trading. I want to share some insights with you guys, some things that I do with clients that I'm coaching one-on-one, or those I'm working with even in private mentorship. One of the things that you want to do when we close out a month is you want to reflect on your trading, right? And not just the P&L or the results, but look at the actual inputs that go into it, right? One of the biggest things with trading is we tend to focus on the outputs, right? Why am I getting these results? Why am I blowing accounts? Why am I not seeing consistency? And then we focus on the output. But what you want to focus on is the inputs that are going into that, the quality of the trades you're taking, the frequency of the trades that you're taking, right? Looking at those individual transactions and asking yourself, would I take this trade again? Right? Is this a good loser? Is this a good winner? I've already talked about in previous videos how to know what a good winner and what a good loser is, right? And reflecting on those things, because over time, once you fix the inputs, the outputs will be what you want them to be. But we focus as traders, and I did this a lot early on as well, in the outputs. Want to get a payout. I want to be consistent. I want to get to break even, right? But that's the outputs. That's irrelevant from what's actually going to get you there, which is the actual inputs. And those are just a few things that you can look at. And saying that to say, now that we're going into the new month of February, it's a new month, right? No trades have been taken. So what should the focus be for someone who wants to get consistent, wants to get consistently profitable and start making real money from the markets? Well, it's following a plan. It's following your protocols, your rules, right? And make that the focus of this month. And I guarantee you, if you focus on that long enough, the outputs, the money, the payouts, the funded accounts, whatever you want to do with it will come as a result of focusing on the correct inputs. So there's my 2 cents here going into the new month. Want you guys to all do well, want you guys all to crush it. And that's what actually goes into doing really well. Focusing on what's going into the actual transactions that you're taking. James, greetings from Kenya. Hello, hello. Happy Sunday, new month. Let's get it. Absolutely. RJ locked and loaded. Absolutely, my man. Ready to get to it. Happy Sunday. Ali, Dylan, what's going on, Ali? Hope you're doing good. Let the marathon begin. Absolutely, Justice. Reaper, my man, Dylan. Glad to be here, guys. Michael, Joe, hello, hello. Samad, my man. Hope you're doing good. Kevin, happy Sunday to you, my man. All right, let's get into the business here. Let's go into the US dollar. So what do we have here on the horizon for this week? A lot going on over the weekend with discussions around tariffs and how that's going to impact the economy. So a lot of things going on there. So do not be surprised if we get a major gap open on dollar, indices, and other assets you may be trading. The cryptocurrency market is already reflecting the weakness and this heaviness. So something to be mindful of here as we go into the new week and the new month. So generally, just to share with you guys some insights that I use for my trading. Going into non-farm payroll week, I'm very relaxed with my daily, weekly bias. And I'll go into what that means and how to actually do that when we get into NASDAQ here in a moment. But I want you guys to think about what non-farm payroll is. It's a very heavy manipulated news event. It's a news event where many times it's a lot of consolidation leading up to NFP, right? Building up liquidity to then offset distribute on that non-farm payroll event. Saying that to say, I come in with a relaxed daily bias. I don't really use daily bias a whole lot in these weeks, and it's a lot more intraday, surgical, in and out, getting paid. It is my intention to show you guys what that means and how I do that when we get into indices, so I can show you guys, give you guys some actionable steps as to how you can actually do that yourself. So I believe the screen is frozen. All right, 1 second. What do I do? All right, one moment, guys. So sometimes OBS will stay on the screen that I'm sharing and it won't let me change it. Let me see what I need to do. Let me get in touch with my tech guy here real quick. Yeah, I know you can see the 4-hour NASDAQ chart, but I'm actually showing US dollar. That's the problem. Appreciate the heads up, though. All right, let me see what I can do here. God, it's OBS always giving me trouble. So if I close down OBS, will that shut the stream? All right, I may have to restart the stream here. 1 second, guys. I'm getting in touch with the tech guy here, get this sorted out. All righty. Are we good now? Hand up. Let me see if this is live. Are we good now? Oh, there we go. All right, we're good to go, guys. All right, man. I had to troubleshoot it myself, man. I need to give myself a pay raise here, figuring out all the technical side of things. Shit, need it. All right, guys. We should be good to go. All right, guys. Phoenix Trader, respects to all you do. Happy 1st from Cali, Colombia. Hey, glad to have you guys. Justice, January was my worst month. Ever since I started trading, December was perfect, made 23%, January -5%. Hey, Justice, I know it's not ideal, being red in January. However, that is profitable trading, right? Making more than you're losing, right? So being up 23% January, -5%, or sorry, up 23% December, -5% January, that's still up 18%, right? Welcome to profitable trading. Really nicely done. Really good job managing the losing month well. And those are things that add up to long-term consistent profitability. YK, hello. Do you usually talk about gold during the market look-aheads? Yeah, check out last week's. Gave you guys the winning lottery numbers for gold, calling it to all-time highs. So absolutely, yeah. Usually during the Q&A, I take a look at a few markets you guys want me to check out. And gold sometimes makes the list. But yeah, if you guys want to see gold, let me know. Good now? All right. Thank you, guys. All right, guys. Let's get into the business here. So let's start with the daily chart. Do apologize for the interruption here. All right. So looking at the monthly chart for US dollar, we ended up closing where we opened. So relatively indecisive month here, trading up, down, and then closing here. What I did like is that we did close above the midpoint of this monthly fair value gap here. So I like how we're still closing in the upper half of that. Still looking for continued bullishness on US dollar. Working down into the weekly chart, if you guys recall, last week we were talking about this down close candle or bullish order block. One of the reasons why I like that as a bullish order block is because it's a down close candle, shifted market structure, and has a fair value gap. 3 things to qualify a high probability bullish order block. Market traded down into that, bodies respecting that perfectly, and this weekly imbalance there. So dropping down, making a low, giving us a bullish week exactly as we expected in US dollar. Dropping down into the daily chart, this black line here, I want you guys to refer to what that is. That black line here is the weekly bullish order block here, right on that opening price. And then you're going to see that transpose down to the daily, right? So why is that also a high probability order block on the weekly chart? Well, because it is a breaker block on the lower time frame. So all order blocks are going to be lower time frame breaker blocks. Why is that helpful? Well, how was I able to tell you guys that we'd see a turning point here and that we'd see the market turn higher? Several factors, but one of which is this bullish breaker here. We have a low, lower low, the highest up close, extend that through, and then look at how we round out this low here. But there's also other factors. I gave you guys the dealing range here, this low, this high. That's our range. Split that in half. That gives us equilibrium. Anything above that is a premium market. Anything below that is a discount market algorithmically. So when the market is bullish and they drop it down into a discount market, 2 things. It gets people to want to sell short. People are trying to sell short US dollar with the buy stop here. And one of the things I want to bring to your attention is that the market delivers in very generic ways, right? This is no different than what we saw down here, right? Go back 3 to 4 live streams if you really want to understand this stuff. Dealing range low, dealing range high, they take it into a discount, rotation higher. Dealing range low, high, take it in discount, rotation higher. The market is delivered in a very generic way. You just want to learn how to read it, and then you have all the income that you need at your disposal. And it's not that complicated. Market drops down into a discount market, and then what's here with all these equal lows? That's sell side liquidity or sell stops. The market trades down into that because anyone that's long, they have a sell stop here. Smart money buys these sell stops in a discount inside the daily bullish breaker here, right? And then we get this low, and then we leave discount valuation quickly. That's exactly what you want to see when, sorry, got the puppy on my lap here. That's exactly what you want to see when the market is bullish. Trade down into a discount and give you immediate feedback that it's bullish, leaving the discount market. So I'm suspecting that we have priced in an intermediate term low here, and then I do want to see the market continue to the upside. Dropping down into the hourly chart, right? So when we have a key level that we're looking for, and I covered with great detail last week why all this was a key level down here, you want to study and you want to read into, are there signs of institutional sponsorship or that there are clues that smart money wants to take this market higher? Well, what do you want to see to confirm that? Market drop down, run on stops, we get that here. And then we want to see a rejection of those stops. From there, we want to see bullish market structure and bullish order flow. Every time the market trades lower and takes out sell stops, that creates an intermediate term low. Market drops down, takes out these stops, intermediate term low. So we have a long-term low, intermediate term low, and now we're on the buy side of the curve here. So I'm looking for buy side of the curve on the hourly time frame, looking for the market to trade higher, and that's very simple. What does that mean if we're on the buy side of the curve or the market's in a buy program? It means it's going to be offered higher, and it's going to attack buy stops and inefficiencies above market price. Very simple. So we have buy stops here, here, and then I like these relatively equal highs here. There's going to be a nice liquidity pool there. And then completing the market maker buy model will take us into this original consolidation back here. So that's the business on the hourly time frame. Let's go into the bond market to confirm what we're looking at in the bond market. So we see we did trade through that up close candle. Let me get the cursor on here. So this up close candle we were watching here, we did trade through that, and now we're trading inside this weekly gap here. Right. So I want to see how we trade there. If we are going to be bearish, I do want the market to trade lower. I do not want to see us get up into this fair value gap here. I do want to see that one remain open, be a breakaway gap, and the market rotate lower from this imbalance here. Working down into the daily time frame, we have equal highs here. So what has bonds been doing? Let's go ahead and zoom out a little bit. Cratering, right? That's why we've been all over higher dollar like white on rice, because bonds are also confirming it, right? Relatively straightforward. So now that we've been dropping a lot, where's the money been being made on the downside? So what we want to see periodically is the market retrace and attack trailed buy stops, right? Just like we see here, all these swing highs there's going to be buy side liquidity or buy stops trailed from people going short. So the market trades higher, knocks them out, and then we continue to the downside. 1 second, let me close Discord. All right. So that's the same thing that I'm seeing here. So we have these relatively equal highs here, here, and here. That's going to be buy side liquidity. The market traded up into those buy stops. So anyone that's short and trailed their stop here, they're now knocked out. So what I want to see is this be like a turtle soup. Market trade above the highs, false break, reject, and start to break down. That will further confirm what I'm looking at in the US dollar, right? So if dollar is going to remain bullish, dollar is not something I'm looking at as a standalone indicator. If dollar is going to trade higher, I want to see bonds confirm it and start to work lower from this high here. All right, moving along into NASDAQ. Let's look at all three of the averages here real quick. Craig, one of the most professional guys in the trading space. Appreciate that, Craig. All right, so looking at the weekly chart here, guys. Let's go ahead and zoom into the price action so you guys can see that. Relatively indecisive, right? So looking at last week's trading, huge wick and then a small body. I don't have a clear read on the higher time frames for indices. The weekly chart isn't clear to me. And as you're about to see as we go into the daily, it's also not clear to me. I'm very comfortable saying that to you guys, right? I'm not going to come on here, blow a bunch of smoke, and act like I know where every single candle is going to go, right? Because even with those I'm coaching or those I'm working with, you may not know where the market's going to go either. And that's okay, which is why I like to tell you guys, hey, I don't have a clear read on this market, which is why I'm going to show you guys, because I also traded last week. I'm going to let you guys know. I traded with no daily bias last week. But does that mean that we're not able to find profitable setups? Absolutely not. Myself, the community, absolutely crushed it last week live. And I'm going to show you guys how you can find a consistent supply of setups and not even need a daily bias. But I'll get into that at the end, right? I'm not just going to leave you guys off with, hey guys, it's unclear, that's it. You guys know I'm not going to leave you hanging like that. I'm still going to show you guys how to make fresh bread, how to create new opportunities for yourself, even if there is no daily bias. But let me go into a little bit as to why it's not clear to me. Well, look at the market structure that we're trading in and look at this here on the weekly chart. There is no clear one-sided draw that I could suspect the market going to, because we have equal highs here, equal lows here. There's no imbalances. There's nothing clear in terms of market structure and order flow for me to read into here. So that makes it what? 50-50. So if it's 50-50, it's not high probability. And there are times in the market where it's not clear, and that's okay, because we know what we're waiting for it to become clear, for it to become obvious. So now let's go into NASDAQ. Let's start on the, we'll start on the weekly chart. So you can see we've been in a range here between this low, this high, and for the past 5 to 6 weeks, ever since the middle of December, we've been trading inside this range here. So we remain in the range. So higher time frame consolidation profile makes it unclear for me to know where that next weekly candlestick is likely to draw to. And then with how we opened on Sunday last week, cratering, it made it even more unclear, and you're going to see that here in the daily chart. So looking at the daily time frame here, again, we remain in this range here for the past few weeks. And what do we have in play right now? Well, we have equal highs here, right? And then we have these equal lows here. I can't say with a great deal of conviction if we're going to take out the buy side or the sell side. Don't worry though, like I said, I'm going to teach you guys how to trade in the range and how to find consistent opportunities, like I said, even without a daily bias. But I want to go into explaining why the market's unclear. You guys are used to me coming here, pointing to levels, and it delivers, right, like $1 million. I don't have that because of this market structure that we're trading in. It's unclear. However, there's still plenty of opportunities when you know how to read price action and you know how to spot the next draw on liquidity. So again, equal highs, equal lows gives me no clear daily bias. So last week, Monday, we gap lower several hundred points, and then we just cratered off that. After that, I had no daily bias for these days here. It was higher and lower. What I'm able to do with that information is determine, okay, the higher time frame isn't clear, so I'm going to work with intraday liquidity. And let me go into what it is that means. And then looking at the 4-hour chart here, you guys can see again, we remain inside the range. Highs, lows, and the market's not leaving the range, it's staying inside, right? So let's drop down into the hourly time frame here. So what I'll be interested to see is these relatively equal lows here on the hourly chart, given that we broke down. As long as we stay below this new day opening gap from this day here, look for the market to run into these lows here. One thing I also do want to mention as well, now that we're getting in the NASDAQ, and I'm going to talk about my trading here this week, what I'm going to be doing, how I'm going to be finding opportunities with the community, is I'm going to be using hourly 15-minute and 5-minute charts for framing the draw, and then 1 minute for entries, right? So what I'm looking at is these lows here, again, as long as we remain below that new day opening gap. Looking at the economic calendar, as you guys know, it is non-farm payroll week. So what I'm doing, what I'm going to be looking for, my team, what we're going to be looking for is framing opportunities Monday through Tuesday. Again, I have a very consistent routine on non-farm payroll weeks. I'm looking to get paid Monday. If I get paid Monday, I stop for the week. If I don't get what I'm looking for Monday, I usually will on Tuesday. And then once I'm paid there, I'm content for the week. One of the reasons why is over time, months, years of doing this, I know that my precision, my performance is not the best in non-farm payroll week. Monday, Tuesday, phenomenal. But the more I push on non-farm payroll week, Wednesday, Thursday, the worse I tend to do on these particular weeks. Although now I am a lot better than I was years ago, getting crushed on these weeks, it's still something that I've just adopted as a general practice, right? And like I always say, it's very important to also have time away from the markets as well. So there's no better time to schedule it or schedule that time away from the markets than non-farm payroll week. So let's get into what I shared I was going to give you guys here today on the 15-minute chart. Going to keep it straightforward, not going to turn it into a 2-hour masterclass, but I want to show you guys how I'm still able to trade, how I'm still able to go in there, find consistent opportunities consistently with no daily bias. And it's using intraday liquidity. And I want to show you guys what time frames I use to determine the intraday liquidity and how I'm able to determine the draw using intraday timeframes with no higher time frame bias. Now, again, I'm not saying you don't need a bias, right? Because trading with the bias is phenomenal, right? It makes it easier to know what I'm looking for, and it's 10 times easier to trade when you know where that daily and that weekly candlestick is going, which is why I take the time to come on here live and share with you guys what my higher time frame perspective is because of how helpful it is. But what do I do when I don't have a clear read on the weekly and the daily chart? I go right down into my 15-minute chart, and I frame liquidity with swing highs and swing lows using the 15-minute chart. So looking at Monday trading, after we had the huge drop off overnight, mark out your lows. Highs, we see at 9:30, market runs higher first, and then we come down and attack the lows, right? So just using the 15-minute chart for your liquidity. Now looking at Tuesday's trading, right? I don't have a daily bias, so I have to work with intraday liquidity. And again, this was all done live as well. So at 9:30, that's when I'm getting to the session. What I want to see at 9:30 is what liquidity do they run to first? They send it lower and then they clear out these overnight lows here and here. So now that gives me insight that the next price run is going to be to these highs here. So just using the 15-minute chart, I'm using this as my higher time frame. And then what I'm able to do is see what liquidity they attack first, because this is going to allow smart money to accumulate long positions here and then distribute them to the highs here. I don't need the low, I don't need the high, I need the meat in between. So what I'm doing here on a 1-minute chart is I'm going long, scalping into these highs here. Wednesday, shitty day because of FOMC. So this day, very crappy. And you can see that most people that traded this got absolutely crushed that day, which is why I don't care too much for trading FOMC. But now going into Thursday, what do we have? Highs and lows on the 15-minute chart. They can't hide it from you guys. So when you see this here, 9:30 starts to show for me. What liquidity do they run first? They take it higher first here. So what does that give me insight that they're likely to do? Send it lower into these lows. And what do you think I was trading on Thursday? A short setup down into the sell side. Friday's trading, same thing. They took it higher into that new week opening gap. Let me show you guys that back here, this void here, right? And then they broke it down. But then when they broke it down, what were they attacking? These equal lows here on the 15-minute chart, and then that void here on the new week opening gap. So that's just a down and dirty way to find a draw on liquidity, find opportunities every single day using your 15-minute chart with no higher time frame bias. There's obviously a lot more that goes into it, understanding time, right? What time do we run for certain liquidity? What signatures in the order flow tell me the market's shifting, right? But like I said, I could easily turn this into a 2-hour masterclass And that's not my intention to do that here. But what I do want to give you guys is clarity as to how you can find opportunities every single day when you know what you're looking for. So again, in summary, frame your liquidity on the 15-minute chart. Observe what liquidity do they run to first, and you're guaranteed to have opportunities at least 2 to 4 days a week with this very, very simple strategy. And it's something I use every single day. Like I said, there's a lot more details to it that I'm able to use because I do want more precision elements in my trading. However, for those of you guys that may be looking for a model, looking for consistency, great place to start with what I shared here today. So that's everything I had on the agenda. Let's go ahead and take a look at crypto. Crypto was piquing my attention here today. Looking at the daily chart here, they did print a new all-time high here. But then how did we trade above that high, right? For those of you guys that are with me live, let's say we have like a drawn liquidity up here. What do I tell you guys we want to see through highs? We want to see speed through the highs, right? Why is that? Because if we see speed through the highs, that's confirming that we're not just taking out this high as a liquidity sweep to break down and reject it. It means we're really running through it and likely going to continue. Because when we trade above a high and dive back down into the range like this, that is not bullish for continuation. That is turtle soup reversal. So what do we have here on Bitcoin? Market traded higher, sweep the buy side here, and then we see what? The market diving back down into the range. Then from there, we see we have this wick here, right? Wicks are gaps. And then we see the market cannot get above this wick here, this inefficiency. Can't hit the upper quadrant. Market trades higher, hits midpoint, and then we dive lower. So this is not indicating strength here, right? You do not want to see the market trade higher, take out a high, break down, and then struggle to get back above it. So once we saw that here, we have this high, we had a failure swing here, market breaking down, attacking this short-term low here. And then what I'll be looking for will be for Bitcoin to continue to accelerate. We have this small fair value gap here at 95,000. And then if we trade through that, split this wick in half, that'll give you around 92,000. And then if we continue to accelerate through that, taking it candle by candle, then I do see us trading all the way down into the 80,000s for Bitcoin. And as long as we continue to, I was collecting my thoughts there for a second. So as long as we continue to see higher US dollar, that will also continue to be bearish for Bitcoin as well. So seeing a lot of things on social media, people talking about how they have their whole net worth in crypto. A lot of people talking about bullishness. The president's talking about it. People that have no real interest in the markets are all talking about cryptocurrency as well. So when you start seeing all that chatter, people wanting to talk about investing in crypto, people that have really no real involvement in the markets talking about it, that's how you know we're very close to a top, because that means there's no one left to buy it. So what does that mean? If no one's left to buy it and the street money or retail wants to buy it up here, what does that mean? Institutional selling is occurring up here. And now there's money to be made on the downside. Looking at Ethereum, even weaker for Ethereum. And what you'll see is we do have an SMT divergence between Bitcoin and Ethereum, right? So that whole time, while we had Bitcoin driving higher, let me see, BTC. That whole time we had Bitcoin driving higher here, Ethereum is communicating that this is a suspect rally. Why is this a suspect rally? Because Ethereum is not confirming it, making higher highs. So what this further communicates to me is that this is a stop run here. Ethereum's under heavy accumulation of shorts because it couldn't even make a higher high. It's not that the selling pressure didn't allow it to make a higher high. It's the fact that these institutionally minded smart money traders are heavily accumulating short positions. And this is what the SMT divergence confirms. So this further confirms that this was a turtle soup, run on stops. And now we're seeing the market break down. So looking at Ethereum, really bearish. We just took out this low here today. So what I want to see is how we trade through this low here. If we continue to accelerate, we have 2,500 here, which is this imbalance. And then through that, we have all these equal lows. So I would not be surprised if we see Ethereum trade down to 2,100 a coin and take out all the sell side liquidity here where this original run started. So now what are you starting to see here? Market maker sell model, right? So the original consolidation would be here. So that's the business for cryptocurrency. Gold, We were watching gold last week. If you recall what I gave the gold traders, there's one or two of you guys that always ask me about gold. I can't remember the name off the top of my head, but if you guys remember, we're looking at this bullish breaker here. Told you guys as long as you're made above the breaker, all-time highs are in sight, and we've now taken that out for gold. So nice delivery up into those highs here. Now, again, we want to see how we trade at the highs. I gave you guys insights that I use to measure order flow at the highs to determine if we're going to continue or if it's just a run on stops to start breaking down and rotating to the downside. Ali, you need a raise in pay. CRT incoming, yeah, I don't do much with CRT. I think CRT is the Walmart version of Power of 3, but I don't know. I could be wrong. I haven't done too much investigation into it. Futures handles, congratulations on the 80 points the other day. Appreciate that. Appreciate that. That's business as usual, though. Nothing too crazy. Nothing too crazy. Lucky. Do you trade inside the opening range, inside the first 30 minutes after 9:30? Absolutely, yeah. However, there's something I want to mention there, right? The first 30 minutes of trading can be tricky for newer traders. So just because I trade it with my years of experience and all the tools I use, that doesn't mean I'm recommending other people to trade it as well, right? Even those that I coach and maybe I'm working with one-on-one, one thing that I do with those I'm coaching and working with is we assess your trade data by time of day, day of week, and we look at all those details. What I've seen from my experience of trading, training and working with multiple traders is that first 30 minutes is problematic for most traders. And if you think about it, it makes sense. Look at what I just shared with you guys on the 15-minute chart as to how I use intraday liquidity. That first run at 9:30, it's generally the fake run. So if you don't know what you're looking for, if you're impulsive, you're not looking at the right things, it's very easy to get caught on the wrong side at 9:30. However, if you do have more experience, you can trade the Judas swing. You can sell the Judas swing, buy it, trade the distribution. I mean, you can do all sorts of things when you have experience. So personally, I trade the first 30 minutes if I see an opportunity. However, you just have to be aware of yourself, what your skill set is. Are you comfortable trading at that time of day? So those are all things for the trader to reflect on and determine if it makes sense for you to trade that time of day. Justice, can you look into gold? Got you covered already. Got you covered already. Would love to see your goals, your views on gold for this upcoming week. I don't like uncharted territory. We don't have past data. Yeah, personally, I'm not a big fan of trading the all-time highs either. Much rather trade in the range because we have so many tools that give us precision that I don't have at all-time highs. But like I said, we'll have to see how we trade here, and that'll give me the clarity I need long-term for gold. Any updates on the mentorship? Yes. So as far as mentorship, I've been getting quite a few questions about that. We will be opening mentorship up to the public here this upcoming week. Priority access will be given to those in our free Discord, right? And one of the reasons why I'm very excited to share this with you guys here this year is because of all the success I had last year with those that went through the mentorship with me. Of course, we're still using the same proven strategies and formula that gives you success. It's very simple. It's not rocket science to be a profitable trader, but you do have to be doing the right things. And since, again, we've had so much success last year, I want to go ahead and continue that momentum here going into the new year. And we will be opening up that opportunity here in the coming week. As I was saying, though, first access will be given to those that are in our free Discord, and you'll have the opportunity to sign up for the waitlist. The reason there's a waitlist, we don't just allow people to sign up when they want, is because we're only able to take on 3 people a week. The reason being, when we take you on to work with us in mentorship, I do give you a one-on-one action plan consultation call where we see where you're at, what got you into trading, what you're struggling with, and I give you a one-on-one game plan for you to then reach the goal that we discuss in that action plan consultation. So we see where you're at, we see what we need to do to get you where you want to be, we give you that action plan, and then you start the mentorship so that we can make sure you're not just another number in a Discord, and that I will be able to have your success at the end of our time working together. So one thing I did want to bring up about that as well is we're only able to take on 3 people a week. So when that does open up, if you are interested in working with myself, my team, get results like others have already seen, then I suggest you move urgently on that. And again, if you're happy with the free stuff that we provide, there's nothing wrong with that either, right? This is just for those that want to learn how to be profitable in a more streamlined way, work with someone that's invested in your success, and give you a proven formula, proven strategy to get to where you're at now to where you want to be in your trading. Is that considered an order block from 2 days ago on the S&P chart? Let's check it out. 1, 2. No, I wouldn't treat that as a bullish order block. And even if I was, we've already closed down through mean threshold, and that's not something you want to see, right? So we have 50% here. The fact that we closed down through that, if it was a bullish order block, that's not a signature you want to see. So we're trading in the range, guys. Like I said, just like I shared with you guys on NASDAQ, it's the same thing for S&P, right? We have what? Equal highs, equal lows, and we're inside of a consolidation range. I have no daily buys here. Like, let me go ahead and zoom in here, show you guys what I'm talking about. Look at this price action here, guys, from last week. No daily buys in here, right? And you can see why. It's not going anywhere. It's in a consolidation. But I did give you guys a way to frame the draw on liquidity and still find opportunities even when the daily bias isn't clear. Gold future Friday closures. Loyalty family. So gold on the futures contract shows a closed bearish while Forex indecision. So always go with the futures contract if you're analyzing a market. And the reason personally why I recommend the futures contract, it's much more professional, right? These gold brokers, I mean, it's just all these different brokers that it's in-house liquidity. So they manipulate the price. There's different highs and lows. There's different opens and closes. And in my opinion, when I'm trading, managing money, it's something very serious for me. So I don't want to mess around with some rinky-dink broker that's giving me different information than the actual futures contract. So to eliminate all confusion, personally, I operate off the futures contract. It's what banks, institutions, professionals are working off of. So I always recommend to chart using the futures contract because there's just a lot of funny business that goes on with these Forex brokers. And I'm not even really going to get into all that, but just know that the Forex brokers, they're very shady. So I wouldn't worry too much about that. I'd focus on the actual futures contract. Alessandro, we all know that 9:30 to 10 o'clock is the opening range for New York. Do you think 2:30 to 3 a.m. is the opening range for London? So opening range for London is midnight to 12:30. But then there's also another opening range from 2 to 2:30. Reaper, in your daily analysis for trading, are you considering 9:30 range standard deviations for fake move or targets? Yeah, absolutely. Standard deviations is something I use as a confirmation tool. If I'm already looking for a particular target, then I will run standard deviations as an additional confluence. But I look at standard deviations a lot like I do SMT divergence, right? It's only helpful if you know what you're looking for, right? So SMT, you can see SMT all day long, up and down on all time frames. So if you don't already have something you're looking for and you're using SMT as confirmation, it's not really going to be helpful. Same thing with standard deviations, right? We could go on there and draw hundreds of fib projections using standard deviations and be more confused than when we started. But if you already know what you're looking for, right? If you have a draw on liquidity, you're expecting the market to trade into a particular level, then you use SMT, standard deviations to confirm it. Then in my opinion, that's when it's going to be the most helpful in your hands. Please check Dow Jones. Yeah, same thing with Dow. Unclear on Dow. For you, those of you guys that are trading the Dow, watch this weekly fair value gap here. We did close below that, so weak close. So I'm uncertain for Dow. It could trade higher, it could go lower. It's 50-50 for me. I will have more clarity. So for those of you guys that want to know my long-term expectations on these markets, I'm keeping the cards close to my vest until we get on the other side of non-farm payroll week, where I'll be able to give you guys more clarity, and hopefully I'll have more clarity to be able to give that to you. But for right now, there's not a whole lot that I'm able to see and give you guys high probability targets like you guys are used to. Love to hear it. Can't wait to get in. Already know it's about to be gold. Absolutely, no doubt. What's the symbol for gold futures? Hard to find it on TradingView. It's this one right here. So you can take a screenshot of that GC1 exclamation point. That gives you the continuous contract for gold. So you can take a screenshot of that right there. Yep, absolutely. All right, guys. Appreciate you joining us here today. Do breaker blocks and order blocks require the series or just the last single candle? It depends. It depends on the context. It depends on the context. All examples are different. You have to look at the market structure, and then you'll know which candle to select to have the correct breaker or the correct order block. Alrighty, folks. Appreciate your guys' questions. Appreciate you joining us here today. Hopefully I have more higher time frame clarity here going into the new week after non-farm payroll week, and that's my intention. With that, guys, I will be getting going. Enjoy the rest of your weekend. Take care, and I'll see you guys on the next one. Bye, guys.